gala continues. Even as we speak, Finance Minister Nirmala Sitharaman is addressing the media after that GST meet, talking about the changes which have been made by the GST Council. There have been cuts here as well. Some products have seen a tax raise, including caffeinated beverages, but hotel rooms, etc. have seen cuts as well. All of that information on your screen. But let's come to the big picture. It's a big day today because the demand for a uniform corporate tax lowered to 25% has been a long-standing one. The Modi government in its first term made the promise 4 years ago almost. And today the promise has been fulfilled. Finance Minister Nirmala Sitharaman has been consistently announcing measures to revive a slowing economy over the last few weeks, but today's was by far the biggest.
To slash the corporate tax rates for domestic companies and also for new domestic manufacturing companies. A new provision has been inserted in the Income Tax Act with effect from fiscal year 2019-20, which allows any domestic company an option to pay income tax at the rate of 22%. The effective tax rate for these companies shall be 25.17%, inclusive of all surcharges and cess. Such companies shall not be required to pay any minimum alternative tax. No MAT on them.
So there have been a slew of other announcements as well that include scrapping a tax on buyback of shares, which was announced in the now infamous 5th July budget. All in all, the measures acted like rocket fuel for the markets, made investors richer by about 7 lakh crore rupees just today and boosted the Sensex and Nifty over 5% higher. The big thumbs up is for sentiment because the message is clear that the government is willing to do whatever it takes to bring this economy back on track. Remember, we've heard from the finance minister thrice just in the last 30 odd hours. But as the cheers continue, it's also important to analyze these announcements and the ones so far made all the way so far in the context of the slowdown we're seeing. For instance, what is the 1.45 lakh crore revenue lost because of all of these measures announced mean for the fiscal deficit? Since poor demand is a big part of our current problem, does cushioning corporate earnings help solve this aspect? What more needs to be done? To join us on their comments for some of these important questions, I'm speaking today with Arvind Sangha, Managing Partner at Geosphere Capital Management. Gautam Chikarmane, Vice President at ORF, is joining me today. V. Ananta Nageswaran, Dean of IFMR Graduate School of Business, and Maithili Bhusnamat, Consulting Editor, ET Now. Welcome to all of you and thank you for speaking with us. Arvind, let me begin with you. Of course, markets have been thrilled today. And we've seen almost that, sigh of relief coming in pre-Diwali, good news and all of that. But the big picture, what are you going to watch from now on? Because at the end of the day, these measures are meant to boost the economy. And the big message is there that this government is willing to do what it takes. It will listen to the views coming in. So what more are you now hoping for?
Well, I think that this is excellent news, and hopefully we will see businesses responding to this in terms of confidence. And I think hopefully there is no fine print. It doesn't look like there's any fine print that we have to worry about. And my view is that at this point, what we are looking for is more of a process rather than any magical change, but a process where business confidence revives. And as business confidence revives, business willingness to invest in India revives. And all of this virtuous cycle will take a while to play out. We don't expect it to play out immediately. But I think what it marks is a dramatic change in corporate and investor sentiment towards India and the government, because I think what was concerning in the last budget was it sounded almost like a budget that would have been presented by a left-wing government. And what this clearly demarcates is a government that is firmly right of center in terms of economic policy, and therefore I think that is a big boost for not just investors but hopefully for corporate and business confidence in India, and that sets a virtuous cycle.
Yeah, that's a very interesting take. Maitri, I want to come to you on that because just yesterday, when you were analyzing the announcements last evening by the Finance Minister, where we'd gone back to the loan melas of yore and sort of diktats to public sector banks about getting 5 customers for every new one. You were talking about how this is a throwback to socialist times. This morning, we've seen a completely different avatar. What is really your reading? What's the message out there? And is the broad message, like I said in the beginning of the show, at least the knowledge that they're willing to do what it takes? They're on the ball, they're on the job. Whether the decisions are good or bad, that will play out. But at least, they're willing to listen and take action.
Well, yes. But it's important, Tamanna, also to remember that the market is not synonymous with the economy. The economy is much larger than just the market. So, it's important not to get carried away by the market reaction. Markets get driven by sentiment, and when you hear something like this, that corporate profits are really going to come back, the taxation is going to come down so dramatically, and HNIs are also going to benefit, it is understandable that markets should really take off. But it's important, as I said, that the economy is much larger than the market, and economy will take longer to recover. The real economy will take much longer to recover. Also, that for every kind of tax cut that you give like this, there is a cost. There is in this case, the cost is 1.4 lakh crores, 4-5 lakh crores, and as we saw in the earlier export package, that loss was about up to 50,000 crores. So, close to 2 lakh crores is the giveaway in terms of tax revenues. At a time when revenues are as it is falling, the impact on the fiscal deficit will have to be seen. The compact presumably with the corporates is that we will give you these concessions, now you please invest. No, but investment is not driven only by taxes. So, we will have to see whether corporates start investing. Also, this is a supply side response, whereas today the problem is one of demand. So, this is a gamble that the government has taken. I hope, like all good Indians, that this pays off, but it is a gamble.
I like the all good Indians touch, but Maitri, I'm going to come to you for a follow up because all of these weeks when we've been speaking on the show about what the government should do, you have been saying that forget about the fiscal deficit target for a bit. Let go because we have bigger problems to look at. That's exactly what they've done, isn't it?
No, but I would have preferred that, yes, they have effectively forgotten about the fiscal deficit because we will end up with a larger deficit. But as I said, in this case, when you put more money in the hands of corporates, there is an option for them to invest or not to invest. So, I would have preferred the same flexibility on the fiscal deficit to be utilized by the government directly to spend on infrastructure, because had the government spent directly on infrastructure, you would have had the same effect. Roughly 2 lakh crores the government would have spent right away on infrastructure. It would have had enormous spin-offs, and it would have benefited those who are at the lower end of the income ladder, construction workers, ordinary people who are engineers, semi-skilled workers, whereas over here the benefit is definitely to the upper class and to corporates who are profitable corporates. So, I would have preferred the government to use the same liberty that they have taken with the fiscal deficit to invest directly, because then the entire benefit would have been spent on investment. Whereas now you have a tax giveaway of what, roughly 2 lakh crores, and that money may or may not be invested by corporates, because as I said, investment decisions are not based only on tax.
No, absolutely. Gautam, I'm keen to know what you think, because there are two major questions which arise after all of the announcements today. And just to take into perspective, there have been a slew of GST tax cuts as well. So we'll have to see where the revenue foregone there lands up. We know that that has been a tight spot as well. So we know we're willing to bet on incentivizing growth. Let me put it that way. Do you think the approach is the right one? And what about some of the concerns that Maitri has raised? Who knows what the corporates are going to do? Are they just going to pad up their profits and wait for demand to pick up before investing?
I think this is more than just a particular tax rate cut or a particular increase, a numerical increase in the fiscal deficit. I think we need to evaluate these tax cuts more as a structural change in the way tax itself, the tax system is changing, in the sense that if you are getting out of all exemptions and exemptions in corporate taxes and reducing that rate, which more or less may or may not be the same collections, it is, I think, a good thing. It is something that every economist, every policymaker has been asking for since 2013, I suppose, when the direct taxes code was first initiated. In fact, these structural changes need to go into direct individual taxes as well, but maybe we can leave that for a later discussion. Coming back to this, I too have been arguing that it's okay to increase the fiscal deficit. And if it is this 1.45 lakh crore for now, it is a gamble on how companies will behave. But to expect that by the next quarter, there will be a huge amount of investments coming and new industries would be set up and new plants would come, that is not going to happen. It's going to come with a lag. I would evaluate this particular decision today to scatter it over the next 4 years. And hence, the 2,000 point increase in the Sensex that we saw in the day today, I think is definitely an overreaction. You will see a correction tomorrow. This overreaction is based on the assumption that now the slowdown will go away, that the next quarter GDP numbers will rise, and so on. I think this is more of wishful thinking. The next quarter is going to be bad. But if you look at this 1.45 lakh crore worth of revenue foregone as an investment into attracting more companies, not only within India, but from abroad into manufacturing, which will create jobs, which in turn is a big political motivator, then this policy makes greater sense. For instance, that a person who sets up a new industry, let me just articulate what Anand Mahindra said, that this is a calling card for the world to come and invest in India. I agree with him. And this is not just a tax cut. It is a structural change in the way you pay taxes. Today, after this cut, it's a different matter that now, until yesterday, India was the 5th highest tax jurisdiction in the world. Today, it is more or less in tune. The global average direct corporate tax rates are 23%. We are close to 25%, which is very much in tune with global norms. You could say this is a globalization of tax rates. I think India as a nation and this policy as a tool is now embedding itself into the world economy, attracting entrepreneurs both within India who are going out, as well as from abroad who will now come in, but not next quarter. And she has given them 42 months to set up their industries before March 31st, 2023. And I think we need to allow her that time. This is the time when perhaps you will hear a lot of announcements, lot of promises of investments. But certainly it's not going to happen tomorrow. You need to give it it will come with a lag, the minimum being 6 to 9 months.
No, absolutely. Before I move ahead, because you spoke about the euphoria in the markets being wishful thinking, I just want to get a quick response from Arvind Sangan. Is that a bit of wishful thinking? And not tomorrow, but on Monday, do you see some of that euphoria settle down?
To say the market is going to be up or down on Monday, that's that's not something that is forecastable. But I don't think this was completely wishful thinking euphoria, because keep in mind that the earnings numbers, bottom line after tax earnings for the most of the companies in the market have gone up dramatically as a result of this announcement. So the market reaction, you could argue, was at least partly reflecting, if you kept the PE constant, E is going up because of the lower tax rate. So yes, I have said at the beginning, and I agree with everything that everybody else has said, there is no magical turnaround, but I don't think the market's that stupid. I don't think the market's expecting the economy to revive in one quarter or corporates to revive. I think the important thing I would add here is that the real question in my mind is there going to be follow through in a complete philosophical sense of other things? Because when I talk to companies, if we're talking about foreign corporates coming to India, tax is not amongst the top, tax rates are not among the top 2 or 3 issues. Tax uncertainty, but other infrastructure and other regulatory uncertainty are much bigger issues. So I think what we need to see as a follow through from this excellent news that we got today is more positive news, and then I think the market will look through near-term weakness if we see this as part of a philosophical move in which the government is reducing the regulatory burden, reducing the tax uncertainty, tax terrorism, all the other things that people have talked about. If people can get more certainty that this presents a new philosophy on the government, then I think the market, again, not calling it day-to-day, will look through the next 1 or 2 quarters of weakness because it will see the potential for much stronger growth.
You know, Mr. Nageswaran, of course, I'm coming to you for your response to what
May I
you've
come
seen.
in, Tamanna?
Yeah, let me just come to Mr. Nageswaran because he's not spoken yet, but I want to come to you on a very specific point and on how American corporates responded to the tax cut that they enjoyed effective Jan 2018. You know, one of the Trump administration's big reforms where their tax was cut from 35% to 21%. So they enjoyed a big cut. But much later, only about 84% of business respondents said that they had no change in investment plans after that tax cut. Only 33% respondents reported rising employment in their firms. So that concern, something that might be echoed earlier, there is no tax incentive or rebate attached with any action that corporates have to take. So we're just assuming that all of this is going to flow down to the rest of the economy.
So is this question for me?
Yes, sir.
Okay, I think contexts are always different, and here the biggest signal from this decision of the government of India is that the ghost of Soot Boot Ki Sarkar has been buried. I think the Modi government has unshackled itself from that shackle which Mr. Rahul Gandhi put on them with his very early in the previous term with his remark, and Mr. Modi was trying to prove that he is more pro-poor than the Congress government could be. Now that mindset has shifted, that this government is not intrinsically or inherently anti-business. That signal has been sent. In the United States, I'm not so sure that such considerations were at stake. So we can't exactly say that the US also has had 7 years of zero interest rates and the economy was already in its 8th or 9th year of expansion, and therefore the tax cut may or may not have resulted in a revival in corporate investment spending over there. That is therefore not the right benchmark for us to compare against. Some of the concerns expressed by Maithili are quite valid. And of course, you must remember, this 1.45 lakh crore revenue loss is a static analysis. But if by some chance the revival in sentiment itself boosts economic growth in the third and the fourth fiscal quarter to some extent, or at least prevents their further decline, then the 1.45 lakh crores may turn out to be the upper end of the estimate of revenue loss. So the real message, more than the tax cut, is that this government is not anti-business. And I think that is a very, very important signal to send. Of course, there are lots more banking reforms, and the fountainhead of NPA generation lies in the power sector, pricing problems, coal linkages. Those things have to be addressed. But this signaling itself is hugely important. This government is not anti-business. That is the key message in this announcement today.
No, that's a very interesting point, and you know, in the light of how the opposition has been responding.
May I come in, Tamanna?
Yes, I'm coming to you, Gautam. I was just making the point that in light of how the opposition has responded to the announcements today, and Rahul Gandhi put out a tweet linking this to the Howdy Modi event, etc. But yes, Gautam, please do come in. Is that your big takeaway? Because we've talked about sentiment, but do you think that the needle has moved significantly from, you know, this government expunging the ghosts of Soot Boot Ki Sarkar?
No, not at all. I think this is the beginning of the end of the fear of Soot Boot Ki Sarkar. Okay. But we have not yet given up on the Phate Jhole Ki Sarkar. We are still embracing that Phata Jhola, because tax, I would say Nirmala Sitharaman has done her job, and on the banking side, that something remains, but on the fiscal side, Nirmala Sitharaman has done her job. Now the attention should move firstly to the states, secondly to the other economic ministries, for instance, labor reforms, for instance, land reforms, These are the things that now need to ride what Nirmala Sitharaman has initiated. The way I see it, she has now initiated the race. Now other economic ministries need to come together. How this will happen, we don't know. A lot of people, including myself, we have written a lot about it. But simply, somebody mentioned that nobody invests only on the basis of income tax. That is correct. Just because the tax rate is lower doesn't mean you will start putting up plant, machinery and others. There's a whole lot of other structures, including the bureaucratic hurdles, corruption, red tape. All this has to go. What we saw when in an earlier program I had mentioned to you, when Modi was able to, Chief Minister Modi was able to bring Tata Motors into Sanand in 2 days. That approach we need to see in the BJP governed states. At this time, when companies are exiting China, they should not be going to Vietnam, they should be coming to India. But simply tax rate is not going to allow that. You will need other accompanying reforms from other ministries. So I still feel that although the suit boot ki sarkar fears have gone away, the phata jhola still hangs around this sarkar. That has to be thrown away.
Okay, now I'm sorry, I have to come back to you for a follow-up because you have to explain this phata jhola concept. Suit boot ki sarkar we know.
Is currently unavailable.
But Gautam, what is phata jhola sarkar? What do you mean? Because if you're saying this is a socialist government that thinks about poor,
Okay.
I'm going to tell you that a government is voted in by the mass of the country which is poor. They have to do work for them.
So by phata jhola, what I mean is that like all other governments before Modi 2.0, which includes Modi 1.0, all other governments have spent a lot of political capital, lot of legislative time, lot of economic policy on wealth redistribution. In fact, they have got so carried away by wealth redistribution that they had forgotten that wealth creation is a necessary condition in order to deliver wealth redistribution. With this, I hope that these are the cutting of the tax rate, I hope, is only the first step. Now, anytime a project is set up, you see the jholawalas coming, crying foul, creating noise, and the government backing out. This needs to stop. I'm saying, when I say phata jhola, I mean there is still a constituency within this government that thinks that it is noble to be poor, that you should not be overly supporting the rich and all. But actually, in fact, it is the rich and it is the corporates, it is the organized sector that creates large projects, jobs, brings cutting edge industries. For instance, you don't expect a small business to set up let us say, an artificial intelligence organization or a robotics organization.
Okay,
These are the industries of the future. You need big corporate
I'm
or
going to
big
open
money.
up this to views.
So this jholawala has to be thrown out.
Okay, I'm going to open up this to views. Another way of looking at it is there are still people within the party, the BJP and the government who know that they have to keep winning elections. They have to keep winning elections. Just because they won a huge mandate, they're not going to take it for granted. Maithili, I want you to come in on this because two of our panelists have echoed this, three actually, that this is more than anything else a signal that this government is not anti-business, is willing to listen, and the hope that more will come. Are you as optimistic?
Well, one doesn't have to be, there's no contradiction between not being anti-business and being the poor as well, because at the time of the elections this government went in on the grounds that actually there was acute rural distress and we need to do something for the rural poor. But ever since they have come back to office, we haven't really seen them doing anything very much for the rural poor. And as Gautam says, yes, you need to create wealth, but in a country which is as poor as ours and which has as many inequalities as ours, it's also very important to think of redistribution and think of growth with equity. If you don't have equity, I'm afraid the entire growth process will come to an end. So I think you need to balance both. You need to have growth, yes, but you also have to keep a very keen eye on equity. So when you have such tax giveaways and tax giveaways which are aimed at the rich, then you must make very sure that the rich remember the compact that they have with the government, remember the compact that they have with the country, and use that tax giveaway, use that SOP to create jobs, to invest. And where Gautam is wrong is that the large organized sector actually does not contribute very much to the economy. It is the MSMEs and the informal sector which together in terms of jobs contribute far, far more. And in a democracy what matters is people, not just the rich corporates. So that I think is very important. Even as we create wealth, equity is very important.
Oh, and, Mr. Nageshwaran, please come in on that point. Please come in on that point. Yes.
Wrong about the fact that the MSMEs and the informal sector, that is actually sustenance employment, that is not gainful employment. And it is also true that in the Factories Act, those companies in the annual survey of industries, it is the larger units that have contributed the largest. I really don't think. I really don't think that we should be saying that these are mutually exclusive. The important point is, in order to serve the poor, the banking sector must become stronger. And there the government top policies themselves are leading to the creation of bad debt, such as the problem with the independent power producers, with coal linkages, etc. And those have to be fixed before more money is available for the government to support the MSME sector. So she is right that there is a need to focus on equity, but I don't believe that these are mutually exclusive or ought to be mutually exclusive.
Another important point I think we should touch upon is we've talked about whether corporates will use now the additional profits that they will have or the additional margins they will have because of lower taxes to invest more. Will they pass this on to customers in terms of discounts? Will they employ more and add employment? But we need to talk about the other end of the spectrum. Where is the demand? Part of the issue also is a slowdown in demand. Now, what needs to be done to bump that up? Because let's face facts, maybe there will not be more plants and more manufacturing if there is no sense that there will be increased demand. It won't happen in a vacuum. So what needs to be done on that end? I'm going to start with Arvind Sangar first on this aspect of the whole economy debate, because let's not leave that out.
Well, so I mean, there's a vicious cycle and there's a virtuous cycle. And the vicious cycle that we were in was liquidity, confidence, tax uncertainty. All of these were feeding on each other and creating the demand slowdown. The demand slowdown started with the corporates, went to the consumers on high-end products, and then started to work through the system even on FMCG type of products. So I think that this whole vicious cycle that we have seen play out over the last 4 quarters, and maybe even longer than that, is likely to take some serious action to break the cycle. And I'm a strong believer. I disagree with one of your panelists who said that government should spend more money. I think that's the most inefficient form of stimulus that you can have. The government is the most inefficient at doing anything. Would you want Air India to spend more money? Would you want which part of the government would you want to spend more money? That's the most inefficient way to spend money. So creating an environment where corporates feel confident enough to spend money and therefore start hiring, to start reviving demand. It's a virtuous cycle. It's hard to pinpoint where it's going to start. It's not going to start because one plan got announced and it started happening. Yeah. But I think it is going to be business confidence, willingness to invest. Even I've talked to business people who were willing to invest, but either the liquidity was not available or they felt very uncertain about the tax and other environment. And I think those are the issues that will help. And this signal will help create confidence. And confidence is an ephemeral thing. It's hard to measure. It's hard to say this caused it, but this is a step that I think creates a lot of confidence boost in business.
The confidence argument is an interesting one. Maitri, do you want to respond to government spending and that point that Arvind Sangar made? And only thing I was saying is that the confidence part of it is also important. We've discussed on this show how gloom and doom headlines make a lot of people pull back on spending that they may have planned. Will this change? It is an interesting aspect. Yes, Maitri.
Well, yes, confidence and sentiment are very important. It's a necessary but not a sufficient condition, Tamanna, because as I said, this was a tax rationalization that needed to be done. The question is, at this particular juncture, will the cost prove more more than the benefits, because remember, as I said, while lower taxes will help in investment, there are much other bigger things that need to be fixed. As Gautam mentioned, the labor market, also the legal system, the contract, enforcement of contract, which is a very integral part of any kind of business. We are way down in the ease of doing business. Overall, we might be number 77, but if you look at the enforcement of contract, we are somewhere at about number 163. So unless you set this nuts and bolts and get the plumbing right, merely reducing tax rates alone is not sufficient. And one simple point about jobs which Anand's referred to, the fact is that the organized labor force in this country is less than 10% of the total labor force. So what does that say about organized industry's contribution in terms of jobs? So I think it's important in India to balance many things, and governments in democracies like ours, which are poor and which have so many problems, have to do that. So you always have to keep one eye on, yes, on creating the right environment, and another eye on doing what the government can do. And yes, the government is not the most efficient spender, but at this particular juncture, spending on roads, spending on infrastructure would have created far greater externalities, I feel. So along with this, perhaps the government needs to think, how is it going to bridge that deficit? You're going to give up a lot of revenue. Where are you going to get the money to keep your fiscal deficit under control? Otherwise, your interest rates will shoot through the roof.
Okay, and another important sort of announcement which got lost was Aviation Minister Hardeep Puri reiterating once more that they're committed to selling Air India and parts of Air India. So maybe speeding up the divestment process will close a bit of that gap. Yes, Gautam.
Yeah.
Yeah, just to the previous point, Air India, I have other kinds of views which are very strong, which I'll reserve for some later time. But on the ongoing on the ongoing discussion, I think today if the government can go out, get 20 iPhone equivalents to shift to India, and set up big plants out here. The smaller plants that the other panelists are talking about will come on their own as suppliers. Just like Maruti started the car company, and there were 100 part suppliers, OEM makers around it. Likewise, if we can get 20 iPhone equivalents into India from China, who are already on their way out, I think not only will you have large corporates coming into India, you will, through jobs, also create subsidiary industries. The demand that we are talking about is also a lack of confidence that perhaps I may not have a job tomorrow or some income tomorrow. Once these industries come and there is high profile conversations around India becoming a manufacturing hub, you will see demand come back. Now, this is not a direct correlation. There is a global slowdown. India cannot escape that. India is part of that slowdown. So, but for all it can do at this moment, India must go out, step out, talk to people, invite capital.
Yeah.
I mean, just to when you're calling, I think India, this government has done enough on the redistribution side, like I said earlier. I think it's now time to focus on wealth creation, give it 6 months of solid concentrated energy, policy energy, and let's see after that distribution will start again. Tamanna, may I take your leave?
Yes. No, I know, Gautam. You said you need to leave. But, I just want to say, even before I'm wrapping, and I'm coming to you, Mr. Nageshwaran, we're talking about what has been done so far. Gautam said the government has done enough, but ye dil mange more. So we've just listed out a few things that we think should happen next and also propel this momentum ahead. One of them is bringing in the direct tax code at the earliest. Some solid labor and land reforms would be another thing that we really need. Maybe rationalize GST rate slabs further. Get rid of this tinkering that we've seen an example of today, a little bit on plates made out of leaves, and let's not get into the nitty-gritties. Let's make the GST process cleaner. Bigger push to divestment is what we've talked about. Mr. Nageshwaran, you agree with that? We need to see now a lot more.
Yeah, of course, there is a lot more to be done, and I think we should also see the announcement today as part of the package of announcements that have been coming since August 23rd.
Yes.
So the banks have been recapitalized, and therefore the important thing is to make sure that there is less risk aversion on the part of the lenders, on the part of the borrower. What the government has done is to reduce the risk aversion among borrowers now with this pro-business signal. The important thing is to fix the risk aversion among the lenders, which requires more reforms on the banking governance side. And you mentioned land and labor reforms, and these are basically state subject. And the BJP is the ruling party in 18 states, and 2 of its allies are there in 2 more states. So it is important that the Prime Minister also call for a meeting of all the like-minded chief ministers over a weekend and agree on a 10-point program, including the GST simplification is now part of the GST Council. It is not a union government decision. And therefore, we do need some important changes happening in the factor markets, and they are part of the domain of state governments, and that is why it is important to get into a huddle with state chief ministers and announce reforms in these areas, because without their cooperation, you cannot boost these factor market, remove these factor market rigidities and imperfections.
Yeah, no, absolutely. It is a big day, no doubt. We can look at how far these measures will go, but I don't think anyone can deny that this is a day when big, bold measures have been taken, something that has been a demand for long. We'll see what else follows it. I want to thank all of you for joining us in the first part of this very special India development debate. I have a very special guest coming up next. I'm speaking with Arvind Panagriya. He is going to give us his views on the announcements made today. He's also part of our very special series, The Road to $5 Trillion Economy. Let's see what he says about what has been announced today. Looking forward to that interview. Do stay tuned.